Let's just take a look at a market. Let's just take a look at market performance yesterday. A real dire day for the Kenyan market, but falling in line with global markets. Now, some investors are saying that traders are taking position ahead of the IPO, which we saw of British American Investment Holding, in order to raise some money to buy into the stock. What is your take on what pushed the market lower?
I think, at least for local funds, there's been a shift of focus to the current BRITAC IPO. There's a lot of exciting things happening in East Africa. We have the BRITAC IPO, which opened yesterday. We also have Century listing tomorrow, and ongoing we have the Bank of Kigali IPO. So fund managers are sitting pretty. They have a variety of investment choices to actually make, which has not been the norm for the last couple of months. So I think it's just been essentially a shift in focus for investments, and also a focus on reporting for the quarter that has just ended.
Has there been any indication of the appetite for the IPOs, the ongoing IPO of the Bank of Kigali and, as you say, the British American Investment Holding Company IPO, which was started yesterday?
The Bank of Kigali, at least on the international pool, has been 3.5 times oversubscribed. For the local funds, which is East African funds and Rwanda, there's a lot of interest, there's a lot of excitement. Rwanda is actually an economy that's growing much faster than Kenya is. The penetration in terms of banking assets in Rwanda is relatively lower, much lower than what we have in Kenya. So it's a growing economy, and I think the focus point is financials and beverages, and Bank of Kigali is sitting very interesting in terms of fund manager assessments.
Now, if we look at where the NSE 20 is sitting at this stage, it's not at levels last seen since March 2010. Given the persistent negative trend we've seen on the market, how are you positioning your portfolio?
I think for us, we're still buyers of some key stocks like KCB, like KPLC. I think for us, KPLC is more of a defensive play given the dire macro environment that we are sitting in. But what is happening, I suspect, is there's a bit of a cutback in terms of volumes based on the uncertainty, at least for the currency. There's been a lot of volatility over the last 3 months, and we have to consider that the Nairobi Stock Exchange is predominantly foreign traded. So I don't think that volatility looks very attractive for the foreign traders. And then again, I think what's actually pushing down the fundamentals for the NSE on a top-down level is the fact that the macro does not look good, albeit the fact that the companies that are reporting strong numbers. If you're looking at Kenya on a top-down level, the top doesn't look very good, but the bottom looks very good. And I think as we see the intervention by different government bodies and agencies in terms of importing of maize, in terms of addressing inflation, this could probably change and look better for the NSE.
Let's look at those banking stocks, and it's interesting you say KCB, because traders I've been speaking to are quite bullish on Barclays. But KCB is a bank to look at in light of the fact that it's been repositioning itself for expansion. It recently had a massive restructuring. It's got new managers at the bank. It's also set to receive an 8.8 billion shilling loan from the World Bank in order to expand its mortgage business in the region. What do you take out of this restructuring process?
I think the restructuring has come at a good point in time. What we've seen in terms of market reaction on the stock has been a bit of a pullback from the name based on the certainty of some two key level managers leaving the company. But when you actually look at the company, understand the operations of the company, there's a lot of implementation that's actually done by the middle level managers, and you don't have a situation where one person actually does the bulk of the work in a particular department. So in terms of what McKinsey has actually rolled out as the new strategy for the bank, focusing on asset optimization, reducing cost-to-income ratios, there are already people who are actually in the bank and are already underway in terms of executing this strategy. I think for KCB, what we like is its footprint in Kenya, its footprint regionally. It becomes a very interesting bank, and also on a valuation basis, it's trading at 1.6 times 2011 book. That becomes a very interesting story, and I think the turnaround is what we like to call it, like the case of the giant actually waking up. So KCB should be something that we should be looking at.
Now, the PE is pretty much in line with other banks in the sector, sitting at around 10.2 times. You're bullish on the stock. Yes. What type of upside potential are you seeing in the stock price?
For us, we're valuing it at a target price of 31 shillings for this financial year. It's currently trading much lower than that, so there's a lot of significant upside compared to the other counters. And I think maybe just to look at the banks, probably a better metric would be to look at the price to book, and it's 1.6 times price to book compared to over 3.5 times for Equity Bank, because you're actually pricing in the value that the assets of the bank are able to generate potential earnings, and probably the price to book would be much better than the PE ratio for the banking stocks.
Now let's look at the cement sector. Athi River Mining also expected to release its results soon. Now, if we take a look at full year results to December, they were quite impressive. Turnover rising 16% to 5.96 billion shillings. Profit after tax up 23% to 792 million shillings. What type of earnings growth are you pricing in for their half year?
We actually released a report on the cement sector, and our assessment was more on a full year level. And I think the key thing for Athi River is the expansion into Tanzania. What we are looking at is 7 times growth in turnover over the next 5 years, which will be complemented by 4 times growth in terms of earnings over the same period. On the banking stocks, we're very bullish on Athi River Mining. We are strong buyers on Athi River Mining, and we think as the market actually comes lower and the prices come off across board, Athi River Mining looks much more interesting, maybe compared to some of the other cement stocks.
Now, with the stock trading at around 175 shillings, what is your price target on that for the year end?
Our price target is 236.
The company released a 5-year bond with maturity set at 2015. Now, this has been pegged to the performance of the stock. If we just look over the last month, it is down. NIC, the arrangers of the bond have enabled an avenue for the disposal of it through the OTC market. But do you expect bondholders to hold onto it to maturity?
I think the bondholders would actually have the option of getting out at a certain point, because the upside was actually limited to a certain percentage of the capital appreciation from the date of listing. The likelihood of seeing it trading on the OTC, there could actually be an execution this year, there could be an execution next year, there could be an execution the year after that. I think that more depends on an independent assessment by the individual fund managers and what risk they've actually attached to the bond trading on the OTC.